So we'll start with GOEV. Looks like some covering. It's got some room to run over the next few days. It's possible that it runs up above the $4 calls, maybe. I would say there's less volume on this move than the one post split, but there's definitely a lot more obligations. Probably try to short it down a bit in the overnight session, but we'll see. Might climb back up in the morning. SPX closed a little higher today, bouncing off of the Friday's low. Saw a pretty decent high around 50.40, which failed as it ran out of top of the book liquidity to move higher. This is kind of the problem right now. There's not enough. We dropped so fast that there hasn't been a big accumulation of like out of the money sold calls. So there's nothing to squeeze. And the bulls really like they can short vol all they want and buy zero DTE calls, but if they don't have any of those short calls to squeeze out, there's just not a lot they can do, right? And that's gonna probably keep us pinned to the huge amount of delta at 5,000 over the next few days. But we'll see. I mean, they'll probably continue to keep trying to climb out until GDP, at which point they might actually get like that breakout that I was pointing towards here in the middle of the week, and that upside test in like the 51.35-ish range, but not yet. It's still going to take some time for them to build up enough leverage to pull that off. CTAs go long again at like 5,200, so I don't think that's really a concern right now. May actually be just a little bit above 5,200 now. Futures started kind of a new trend today, uptrend. We failed the prior, so we can get rid of that. Probably looking in like the 50-20 range for downside support, depending on the overnight move. I feel like this will stay pretty stable right here around like 50-45, kind of in this range, right? Through the overnight session. I don't think there's anything really important coming out tonight, so probably nothing to move things significantly. Commodities dropped a little bit today, down 47 points. Still kind of chopping there after their breakout and consolidating a bit, but it's obvious that risk expectations are still heightened. Commodities aren't pulling back in any meaningful way. Yields are staying pretty elevated. I think the 10-year is still around 4.6. Dollar pushed up a little bit today, but not very much. It did hit some nice highs today, but it seems to be kind of just stagnating here right around 106.10, 106.20. Correlation pulled back super hard in line with the 9.5% drop on VIX. So they're really shorting a ton of vol to try to get those long puts to stop out, which helps move to the upside and also get sufficient leverage for an upside pump. I feel like this isn't going to stop going into tomorrow. We're probably going to see more of this, especially because we're seeing them short vol further out here on the 3 month. Right, like VIX 3 month dropped 8.26% today. And I think VIX is still in backwardation though, even with today's move. So another leg down on bad news or heightened risk in the Middle East could spark another big move up in volatility right now. Like it's not fully under control, but they're trying very, very hard to get it under control, and they could easily do that over the next 2 days. Carry trades still getting leveraged up pretty hard. Forward return on volatility still positive. Move, I don't think this is updated, but this might be from Friday. Skew bounced back on Friday, which was a bit weird, but we talked about that yesterday. 20% of the S&P above its 20-day moving average. This reversal should probably be considered bullish, but I would say probably a lot more bullish once we get above like 35%. And a whole new week of correlation, but correlation is actually improved, and we're at negative 20.46. So despite all the vol shorting, VIX and VIX futures are more closely correlated now than they were at the end of last week. And we're pricing in about 0.33 rate cuts, which is roughly in line with where we've been since the 10th. We move up a little bit, down a little bit. I think our low has been like 0.3, 0.29 with like a high of 0.41. So mostly pricing in less than 2 rate cuts. Hot GDP and hot PCE could change this, and we may fall below the 0.25 level. Pretty much everything up today besides Tesla and UNH. And then out here on the technical side, the EMA 30 crossed under the 50 moving average, which should imply a period of extended downside beginning and a continuation to the downside over time. But it's very likely that we bounce back and retest that EMA 30 before falling further, right? So we should expect some kind of small rally up to like the 5. That's about 511, which is also the reversal signal out here on the monthly. That 511 from the Feb high, 511.06 right there. So a bounce back, retest this long-term trend, and then we'll see, right? That's the point at which we'd probably look for a bigger failure again. Obviously, that'll see VIX drop, and it'll open up the opportunity for more puts to come in at lower levels in stronger positions. This drop was really maybe too fast for bears to get out ahead of it. But if we get a continuation of this drop, which is what we'd be looking for here, might find that positioning's a lot stronger the second time around. When do healthcare costs go back into inflation? The May report. So it'll be released in June. The June CPI for May. So June release, May CPI. That should be a substantial uptick in inflation too. So as long as inflation remains high through May, we should expect it to move sharply higher in June. Anyway, that's it. Thank you guys so much for tuning in. I will see you bright and early tomorrow morning. I hope everybody has a wonderful night. Later.